Welcome to the specialist trading presentation of Gambler versus Trader. This is a specialist trading weekly stock, E-mini, and Forex lesson for the week ending February 3rd, 2012. Now, as you just saw, from time to time I will combine all of my courses into one weekly lesson to explain something that I feel is extremely important that really crosses over and transfers over into all of the different trading markets. So I'm going to explain exactly what I mean by gambler versus trader in this week's lesson. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you performance results from this week's lesson, but remember that we can in no way guarantee that any of the results I'm about to show you will be repeated. So please take a moment to view our disclaimer, and then we shall begin this week's lesson. Okay, the reason I am combining all of these classes together in this one weekly video is because I really feel this subject is extremely important because I've mentioned it many times, the difference between a gambler and a trader, but I've really never gone into detail. So I want to do that in this week's lesson for stocks, E-minis, and the Forex markets. Now, it all started out when I received an email and it stated, Mr. Primo, in many of your presentations, you speak about not having a gambler's mentality and how it is counterproductive to specialist trading's philosophy. My question is, what exactly is a gambler's mentality? So this is an extremely important question because I believe a gambler's mentality is a recipe for disaster. I know firsthand because when I first started trading, as many of you remember in my presentation, I spoke about when I was first starting trading on the floor of the stock exchange, I had a gambling mentality. I was trying to pick tops and bottoms. And I was really struggling for years because this type of mentality, when it transfers over into your trading, really won't give you any type of consistent results. So it wasn't until I turned my way of thinking around that I really started to realize that gambling mentality is really akin to a lot of traders, and that's why most traders, I believe over 80%, are not successful. So we really want to get rid of this mindset, this gambler's mindset. That's why I've combined all three of my weekly lessons into this one video to go into detail and explain what exactly is this mindset. So let's take it step by step. Let's first of all talk about what a gambler sees as opposed to what a professional trader would see. All right, the gambling mentality first comes up with a type of victim attitude. It blames outside sources for losses. All right, you have to realize that if you're blaming an outside source for your loss, this is a gambling mentality because you're always going to see what, a gambler will think it was the wrong cards, or the team messed up, or the horse, didn't live up to its statistics or something. So there's always an outside source. But a trader, a true trader, takes responsibility for all trades, regardless if they are losers or winners. And the reason why a trader can take responsibility when you have the trading mindset is because a trader is part of the process. He understands that he's involved in the decisions. You see, when you rely on an outside source for your decision-making process, that's when you can, give yourself an out to blame something if it doesn't work. But if you're only listening to yourself and the market, the trading chart in front of you, there's no one really to blame other than yourself if it's a losing trade, and there's no one really to congratulate other than yourself if it's a winning trade. So a real trader takes responsibility for all trades. You never have a victim attitude because that's akin to a gambler mentality. A gambler will blame outside sources for losses, and a trader takes responsibility for all trades. What are some other mindsets of a gambler? Well, a gambler has a daily urge to place a wager. He must satisfy the rush of gambling. I know so many traders who look so forward to the next day, not because of, they're excited about a setup or they're excited about putting together a trade, a plan that may be unfolding, but it's more of the rush. It's more of the adrenaline rush where they need that action. So many gamblers will say, I need the action. What else can we bet on? Okay, this is once again a gambling mentality, as opposed to a trader who only trades when a proper setup is determined. You see, it's kind of like you're just sitting there waiting for the right opportunity. You have this discipline, you have this kind of relaxed mindset where you know it will eventually come and you just wait. There's no need to have this adrenaline rush, and I really feel if you're looking for an adrenaline rush, you're probably doing everything totally wrong. There shouldn't be any type of rush. I've often said in many of my seminars that if you're trading correctly, it's extremely boring. So there's no rush to chase after. If you're looking for a rush, or if you need that rush, you shouldn't be trading. You should be gambling. A gambler also bets on the long shot. He's always looking for that long shot. He's always looking for that, 10 to 1 type of odds, where he'll really make a big score if things happen to go in his favor. He'll always look for just that one bet that no one else is interested in, and the odds are so far against anyone betting on that. He's looking for that long shot so that he'll just have make a huge score and just clean up on this, okay? That's a gambling mentality, as opposed to a real trader who always trades with the trend. See, you're not looking for that long shot, you're looking more just to be in sync. See, trading with a long shot would be comparable to trying to pick a top or a bottom. You're saying like, this is a long shot, the market is falling out of bed, but the long shot is that it's not going to go any lower, so I'm going to try and pick a bottom here. Okay, it's a long shot, but man, if I pick the bottom, boy, I'm going to make a lot of money. And conversely, a long shot is if you're trying to pick the top. The market's been going straight up and you're going to stand there and say, it won't go any higher. I'm shorting it right here. It looks like it's going way higher, but boy, if it stops, I'm getting in at the very top. That's a gambling mentality. I know firsthand because I used to trade that way. And sometimes it works. I'm not going to tell you that it doesn't work all the time. But the times it doesn't work are the times you'll give everything back. And that's not really what we're looking for. We're not looking to hit these home runs and then to strike out the rest of the game. We're looking for a nice consistency. So a gambler is always betting on the long shot. That's where he thinks he's going to make a big score. And really it comes from a mindset that you don't think you can really make it on your own. You think that the only way you can really have any type of success is if you go for these big scores with a long shot. Where a trader says, success is just about being in sync with the trend. And that's all I'm going to do. I'm going to have this nice consistency with the trend. Now, a gambler mindset places his bets that are based off of emotions, okay? You wake up with a hunch. He goes, I had a great hunch. I got a great feeling about this bet. It's all discretionary. A gambler will have a hunch or a feeling and say, I can't explain it, but it's got to win this time. I know it's got to take place. Whereas a trader makes his trades that are based off of a well thought out trading plan. A trader still has room for discretion, but probably 25% of the plan is based on rules, and 75% is based off rules, and 25% is based off of that discretion or hunch. And the difference between a gambler's hunch and a trader's hunch is that a gambler's hunch just comes from a feel, just comes from an intuition. It really comes out of more of desperation and hope, where a trader's hunch comes from experience in trading, knowing that subconsciously he's seen the same scenario before, he's seen the same conditions, and he has a feel or a discretionary hunch that maybe the same thing will happen again. So it's based off of something that has happened in the past, and it's based off of some type of mental research. It's not based off an emotion and based off of a wish fulfillment dream. Okay? Now, a gambler also increases wagers and doubles down while in a betting slump. How many times have you gone to Las Vegas or somewhere close to you, Atlantic City, and seen a lot of players at the tables doubling down or betting more, increasing their chips because they've just had a series of losses and they've got to make it back to feel, well, if I bet 5 times more than I usually would, I'll make it all back on this one hand because I've got to win now, right? I've lost 5 times in a row. This one's going to come up. It'd definitely be a winner, so I'll make it all back in one trade or one wager here. Well, the trader mindset is that he decreases trades and never averages down while in a drawdown. In other words, while you see yourself going into this type of slump, this trading slump, your trades are going to decrease. With our advanced management, our trade management, we show you how to decrease your trades and how to actually get out of the market entirely if you are in a sustained drawdown. And we will never, ever increase our trades or increase our bet while we're in a drawdown. We're never going to average down. So many traders, especially when I was on the floor, myself included, when you were in a series of losses holding on to a stock, you would buy twice as much because if it bounced up a little, you'd make a lot of it back. It really is a recipe for disaster to do that. So it will never, goes against all of specialist trading's philosophy to average down or increase your trades while you are in some type of a slump or a drawdown. We're going to decrease our trades and we're going to never average down, as opposed to a gambler will increase his wager and double down while in a slump. So the question that comes up with a lot of traders is because a lot of this stuff deals with self, introspection. You have to really look at yourself, and most traders aren't, they're not very knowledgeable about that or how to go about doing that. So they'll ask me, well, Steve, how do I know which type I am? So you ask yourself, which type are you? Do you have this gambling mentality, or are you more of a trader's mentality, a professional trader's mentality? You have to ask yourself while you're in the heat of the moment there, while you're actually trading. Are you trading for the rush, or because you're excited because you feel your plan is going to work out? And it's very difficult. You have to, as I said, do some introspection and really work on yourself to see what your true motivation is. But I've come up with a really good way to answer the question of which type you are, and it is simply by your results. Okay? Check your results. All right, check your results in trading, and it's really easy to see because a gambler's results, the betting results, are like a roller coaster. Okay, it's very similar to the song lyric "Riding high in April, shot down in May." A gambler will have these series of really nice wins and really nice results where they're going in their favor, and all of a sudden, lo and behold, you'll be shot down in May. You'll lose everything, or you'll go in this terrible slump. So your P&L, your equity curve for gambling, will look like this roller coaster where it's going up and down, and after a while you really have nothing to show for it. You may have a long period of success. It'll be followed by a very short period of disastrous results where you'll give everything back. That's how you know if you're trading with a gambling mentality. Okay? So you have to step back and look at the entire picture, and you have to step back and look and say, is there anything I really have to show for my trading after the last couple of months or years? Okay? Whereas a trader, a professional trader, has a smooth, consistent upward slope in his equity curve. He's not going to hit home runs. He doesn't have this straight up approach where he's just making hundreds of thousands, if not millions of dollars over a course of years. No, he's looking for a nice, smooth, consistent upward slope so that over time he has a lot to show for his progress. There's a lot of success, there's a lot of profits there, but it's a nice, steady, consistent upward slope. That's the way you'll know. It's in your results. I know it's difficult to ask yourself, well, am I trading here because I'm excited about the trade or because I need the rush? It's difficult sometimes to ask yourself these questions. So the best thing is to look back at your P&L and look back at your results. If you really have nothing to show for your trading career so far, it may be because you have this gambling mentality, and you really have to realize, are you averaging down? Are you trading off of emotion? Are you blaming others for your losses? Or, saying, oh boy, it was a great number that came out today in the earnings, that's why I made money. Or are you looking at outside sources to take responsibility for your decisions? So these are things you have to really understand. A trader always takes his own responsibility, follows a succinct plan that he's researched and practiced and paper traded for a while, doesn't blame anyone, doesn't trade off of emotion, and really has this nice, smooth, consistent upward slope in his equity. That's what we're striving for, and that's what my goal is, to teach you how to trade with all of these qualities. All right, so points to remember. Please, never ever trade with a gambler's mentality. I hope this kind of defined it a little bit better, especially to that student who sent me the email. A gambler's mentality is truly a recipe for disaster. The reason being, it's similar to the slot machines. Okay, most people who go to Las Vegas to play the slot machines have fun, and they have this false sense of security, thinking that they've won over time. But if you look at all the time you've been there, either for the day, for the hour, or even if you've gone weeks or years and just played the slot machines, I would almost guarantee that you've basically spent more and lost more than you think you've won. And it's all because this gambling mentality gives you a false sense of security, thinking that you're actually doing well because you have these series of nice wins. But overall, the losses really outweigh. So it's a recipe for disaster to ever have this gambler's mentality. You must decide beforehand your trading strategy. That's how you'll get rid of this mentality. The trading strategies we have here are numerous, and they're meant to fit particular styles and personality traits. So if you're someone who likes to trade a lot, we have a lot of strategies that fit that. If you're someone who likes to only trade maybe once or twice a month, we have strategies for those as well. But once you've decided, you've gone through all of the different strategies that we offer in our courses, just stick to the rules and trade maybe 1, 2 at the most, okay? And then stick to those, okay? Listen to all the videos, go to all the weekly lessons, and learn as much as you can. The reason we're doing this, the reason why we want you to learn this, and the reason why I'm not just furnishing with you signals each and every day, is because I want you to become a part of the process. Once you become a part of the process and you're initializing these signals on your own, you're spotting them, you're making decisions if you want to trade aggressively or conservatively, you've become a part of the plan, and there's no one to blame. There's no one else to congratulate. There's no room for emotion. You're really a part of the trading process, and you're on your way to becoming a professional trader. Okay, so do this whole process and then paper trade, and I really feel that you will be, with the trader's mentality as opposed to the gambler's mentality. All right, so even though it says the weekly stock lesson, this is actually the weekly stock, E-mini, and Forex lesson. We're covering all the different categories here, all the different courses, because this is an extremely important lesson that needs to be taught to each one. It doesn't matter what you're trading. It doesn't matter if you're a day trader, a position trader, or an investor. The gambler versus the trader mentality really comes into play in all of these different categories. So I really wanted to go into detail and explain exactly what it is. So remember, learn our strategies and then paper trade them. We're trying to give you this edge of consistency. That's the specialist edge, but you can't get that unless you paper trade first. Once you really understand the process, you'll get rid of this gambling mentality if you have it and become more in line with the specialist trader's edge, and that is the trading mentality. Now remember, if you have any questions regarding what I went over today or anything on our websites, whether it's stocks, E-mini, or Forex, please do not hesitate to email me at stevenprimo@specialisttrading.com. In closing, I ask that you take one last look at our disclaimer. I showed you performance results and my opinion on the gambler versus trading mentality, but please remember that we can in no way guarantee that any of these results will be repeated in the future. Thank you so much for joining us today. Wish you the best of luck trading, and we shall see you right back here next week. Bye-bye.